Gareth Kiernan is Chief Forecaster at Infometrics. GDP numbers out yesterday. He joins us now. G'day, Gareth. Nice to have you on.
Morning, Duncan. How are you?
Yeah, good. Bit of a surprise that numbers were stronger than forecast, which is finally some good news.
Yeah, well, after contracting by 1% over the previous two quarters, it's nice to get a positive result. And like you say, a little bit better than markets were expecting, although still quite patchy growth across the economy. So very early stages of a recovery, I'd say, rather than anything full blown at this point.
Yeah, that's a pretty nervous, tentative sort of step out of the woods, isn't it? Really, it's not locked in. It's nothing to sort of write home about. But it's there, I suppose. It's the start of maybe a green shoot or two.
Yeah, I mean, when you look at what it was driven by, I mean, tourism was quite a big or important part of the growth that we were seeing. So you're seeing more spending across the likes of accommodation, travel, arts and recreation. And a lot of the spending growth that we thought we'd seen through the second half of last year, which was just starting to come through from households, turns out it was probably people visiting the country rather than Kiwis actually feeling that much more confident about getting out and spending yet. There's a little bit of that there, but we'd like to see a lot more coming through later this year as the interest rates cuts continue to flow through into people's wallets.
When's that going to largely take effect, or when will we see the impact of that? Because people, I think, from about now are starting to come off those 6-month fixed rates, and a lot of people took 6-month rates. So we should start to see that, shouldn't we?
Yeah, I think there's a bit of a wave building up, which you will see through this year, and I suspect it's not just interest rates. I mean, part of it is the labour market as well, and I mean, while job ad numbers have stabilised and employment doesn't look like it's falling as it had been previously, that hasn't quite turned around yet. And I think people will still be a bit reluctant around, particularly major spending decisions and being pretty cautious with their money until you start to see a more concerted improvement in the labour market. We're thinking that will start to turn around from mid-2025.
Yeah, people are worried. I looked at the survey a couple of days ago. People are worried about losing their jobs, and about one in two workers are poking around looking at what's available in other places. So people are, if they're nervous about their jobs, they're not likely to spend big, are they?
No, that's right. I mean, it's all very well if you've got your mortgage rate coming down, but you're still not going to be able to pay the mortgage if you're out of work next week. And the reality is, when you look at job ad numbers, okay, they have stabilised, but they're still down 30% from where they were in 2019, so still at quite low levels. Businesses not really themselves looking to sort of commit to a great deal of hiring at this stage. So a little bit of chicken and egg there. But I think as both those interest rates continue to come down, and you have got very good commodity prices as well for many of our exports, and while farmers will be coming through the course of this year and looking to reduce their debt levels, it does augur well for provincial economies later in the year as well.
I was going to say that some of the small towns, they should see that, and they usually do see the flow-on effect of a decent milk payout. I see the shareholder return was pretty good; it was up as well. So Fonterra's profit, I think returns was $700 million. So you should see that in the places like Stratford and Harwood and out of Hamilton areas and things. I mean, you should start in the South Island. You should start to see some of that middle of the year, shouldn't you?
Yeah, I mean, obviously, in terms of the dairy payout, they have the sort of forward payouts, but it isn't until they sort of do the wash up at the end of the season that the sort of bulk of that money comes through. But yeah, we've done the maths on it, and we estimate it's about $4.5 billion more coming into the economy from that higher dairy payout this year. To put that in context for you, the interest rate cuts that we're seeing at the moment, we estimate that by the end of this year, that adds about $2 billion, just over $2 billion into household pockets. So, that $4 billion from dairy alone, more than double what you're seeing in terms of the interest rate effect. So, yeah, looking good for those, like you say, sort of Waikato, Taranaki, Canterbury, Otago as well.
Mm. How much does the housing market affect the economy? Because a lot of people say to me, "Oh, our economy is a housing market with some milk powder attached to it," And I just wonder when housing starts to go again, starts to move, then the economy will move at a similar pace. Do you think, or I mean, housing is still so connected to the economy, isn't it? But so much part of the economy that sort of the confidence levels, isn't it?
Yeah, I mean, sometimes it's all a little bit wrapped up with the same stuff, right? So if jobs are improving, if interest rates are coming down, that will positively impact on the housing market, which then turns around and has positive impacts on other parts of the economy. If people are moving house, They are, potentially buying new appliances, doing renovations and that type of thing as well. So they are all wrapped up together. I guess my reluctance around the housing market is while those interest rates coming down are positive for the market, and we do expect to see a bit more demand coming through the course of this year. The reality is that when you look at house prices compared to incomes, or indeed rents compared to house prices, they're both still, those ratios are well out of whack. Housing is still unaffordable, and from an investor point of view, you look at the yields you're getting, unless you're expecting pretty decent capital gains coming out the other side, it's pretty hard to make the numbers stack up, I would have thought, for most investors. So, the housing market will improve, but I don't think we're going to see it roaring away through 25.
I just don't know how people do it. I'm sort of just personally myself back in the market looking around to get something, and and I'm in the media now, which is we know what's happened in the media. It's not what it was. So, and I'm looking, and I'm thinking, how on earth do people do this? In my parents' day, it was your income was about you need about 5 of you to go in it.
I was going to say you need a few flatmates, Duncan, to help you purchase it or pay the mortgage for you. Yeah.
Yeah, it's astonishing. Building and construction looks like it's a bit flat. Now we have an infrastructure boom. Do we have an infrastructure boom about to hit us? Is there going to be some fast-track projects? Are we going to see some activity? What's your take?
Well, of course, a lot of the fast-track stuff has been about getting things through the consenting process or around the consenting process more quickly. So it's not necessarily about getting the work done. You're hoping that it does open the opportunity, but at this stage, sort of infrastructure is tracking along sideways more than anything. Looking forward, though, into 2026, the word around Wellington is that the politicians are very focused on making sure that by the time we come around to election next year, they can turn around and go, look at the things we're doing, look at what we've started to do, vote for us again, so that, we can get this finished. So there is a real focus and a push coming for delivery to start by later this year and coming through next year. So expect to see more infrastructure, but across housing, consent numbers have stabilised, but residential construction is still under a fair bit of pressure when you look at, softening net migration and weaker population growth, and the sort of commercial and industrial construction that's only started to come back off its peak recently, and so there's probably still a bit more downside through there.
Yeah. Just speaking of fast track and projects and things, I see that the Contact, that big wind farm was turned down by that panel. Are we a country that's going to say yes to this sort of investment, or are we, unless it's renewable as well, or are we a country going to say no? Because I think there's a dangerous precedent in that message there.
Yeah, I think the government is obviously trying to streamline that process and reduce the sort of risk of things not going ahead, and Labor talked about that as well in terms of the sort of problems that the Resource Management Act has turned into in terms of getting stuff done. But yeah, at the moment, I think we are a country that a lot of the time seems to be constrained by excessive regulation and certainly an attitude, gee, I don't want this thing built next to me, thank you very much.